Hello and welcome back to the chaos version of crypto. My God, this shit is insane. I mean, I woke up, the markets are dumping. Now the markets are pumping. We had the 10-year treasury bond auction turn out pretty all right. I mean, just like everything's upside down, it's total chaos. And I'll be honest with you, I think the crypto markets have really put themselves in the position for a lot of pain. I would argue that the crypto markets themselves, structurally across a lot of the players that are involved, are fundamentally broken. And there is a way to fix it, but let's just look at the what and the why. Let's get into it. All right, friends, so to break this down, let's just look at some of the major launches that happened recently in the past couple months, really past year, to be honest with you. We have Barachain, and I mean, look at this. I've talked about Barachain. I think the product is really cool. I like the idea. Proof of liquidity, super fun. But, I mean, this is a down and to the right chart, and I don't even know if there's any right. This one's just down. But we're looking at a listing price of $13.27. That's just right here. That might be close, if not, the actual number. That is, I mean, we're at 357, dropping 75.9%. And that is at a fully diluted valuation of just shy of $2 billion. When this thing launched, it was at $14 billion. That is correct. You heard me. $14 billion valuation for what? For a protocol that is largely experimenting with a reward system and incentives mechanics around proof of stake. Is that a $17 billion company? I mean, shit, SpaceX is like, what, $350 billion or something, and they're moving us up to space. So you look at these numbers, and it's crazy. Let's go Eigenlayer, Ethereum's great hope, right? They raised a $100 million round from Andreessen Horowitz alone, A16Z. Now let's look at this chart. I mean, at least they had some price action that wasn't atrocious, right? Even hitting all-time highs after listing. This is like fairly unique, but to be fair, this listing was a long time ago, this was December 15th, 2024. Now we have a complete down and to the right, looking at an 87% dip. So at 73 cents now, launching at $4, right? Fully diluted valuation, $1.2 billion. I mean, this is fucking nuts. These are expensive pieces of software. And what does Eigenlayer do? It is experimenting around restaking and slashing and trying to add in the negative effects of acting malicious inside a blockchain. This is very theoretical, very experimental, much like Barachain. We have Movement Labs, who is really building a piece of tech that's supposed to connect the EVM, so the Ethereum virtual machine, with the Move language, the coding language that underlies Sui and Aptos, made by Libra of Facebook. And it's a great language. But, I mean, this is dev tooling, guys, at $3 billion val, and that is down, down, down. So at $3 billion, we're at 78% down. I mean, what are these numbers, right? This doesn't even make sense. This is a software company. It doesn't have product market fit. And the reality is that we have absolutely fractured our markets. These companies are listing at ridiculous valuations. They're far too expensive. And it turns out that the actual money to be made these days is on the destruction of these prices, right? This is about shorting. If you look at these things and you see a trend, it's very obvious that the way to make money on a new token is to short it to kingdom come. And that is the foundation of our break. I just want to go back in time a little bit. This is ETHLend, now known as Aave. Aave, over the course of the past few days, handled $400 million worth of liquidations. Their borrowing lending platform supplies around 25% of all of DeFi volume. Like, no joke. And let's look at what they did, right? They raised 17.9, let's call it $18 million in 2017 on November 30th. And these numbers are insane. One, humble raise. This is a public sale. So this is going out. It's a distribution event. This is not private. And these are everyday people that were able to invest. Of course, USA citizens excluded because we have these stupid things called accredited investor rules. So even if the USA participated, they would only allow the rich millionaires to do it, which is very problematic and sort of why the ICO was created in the first place. Now, let's just dive into these numbers a little bit. This is crazy. Token allocation, 77% to public. 77% of the tokens go to the public. I mean, this is nuts. When we take the finite number of tokens and we take the ICO price, which is around 1.5 pennies, I mean, you're looking at an FDV, fully diluted valuation of around $21 million. That's only twice the amount of capital that they raised. I mean, these numbers are small. 21 million versus, I mean, let's go back to movement. Where you at? My God. Oh, it's already, I mean, billions in here, right? Billions at FDV. If the valuation now is 3 billion and it's down 78%, I mean, holy fucking moly, guys. And this is where it comes into play. There's just too much money loaded in the front, right? Under this format, the only way you're going to make money on a token is buying it so early and so cheap. And who are those people doing it? It's the VCs. It's the private round investors. I'm not here to say VCs are bad. Their money is what continues to fund the ecosystem and allow people to build businesses. But at the same time, we go back to ETHLend, and Aave today is a truly amazing company. And just look at this. This is humble. And you know what? The product wasn't even fully baked. It wasn't working all that well. But while they socialize the downside, they also socialize the upside. And let's just look at what that upside is, because the token is now at $136. Granted, when they did a conversion and a rebranding to Aave, it was 100 LEND tokens to one Aave token. But we're now looking at an FDV of $2 billion. And this is with the tokens basically all out. That's why the market cap is basically the same as the FDV. This is a rare thing in crypto world, but we're now looking at an actual price discovered asset, right? Aave is fully circulating. Its price discovery has been strong. Is what you get for launching humbly in 2017. Now, at $2 trillion coming up from the 21 million, I mean, that is value upside that, again, 76%, 77% of people in the public had exposure to. This is what made crypto. It was this ability to invest in early companies at these low valuations and ride their upside as they prove their technology, as they build product market fit, etc., etc. This is what made millionaires. These are not what make millionaires. This is how the public loses. And when you run this on repeat and people begin to catch on, they see that these tokens are only useful for dumping on retail. It makes it so there's no buyers. If there's no buyers of the tokens, we are going to lose developers because people obviously want to exit these things for real. And let's be honest, team token lockups, they're like 4 years, and they usually come about a year or so after TGE. They start that 4-year process. So like, do you think this in 4 years is going to be worth it for the people that are taking on tremendous risk to turn down real jobs that pay well, that either, provide equity in something liquid, and they get these tokens at the end of this curve? Now, it's crazy. I've spoken about Guns, which is a company I'm invested in. I really like the game. I think it's amazing. But they also suffer from this very high val. Now, at only 500 million, I mean, they're half of when you compare it to Movement, I mean, Movement, again, developer tooling, Guns is a very real video game that you can go play in beta. However, they did do the thing where their market cap is very different from the FDV because they only have 6% of the tokens trading. Remember, ETHLend gave out 77%. And what does Guns have circulating? 6%. This is the bane of Sam Bankman-Fried. He came up with the model, the low float, high FDV. So basically raise a ton of money in private rounds, release only so many tokens, and you now have enough money to manipulate the markets. But it's not working. And one of the craziest things in talking to the Guns team is that when Binance agreed to list this, and Binance, they cost a lot of money. They cost you token lockup extensions, all sorts of things that can be negative towards the team itself. But what they're doing now is listing perps alongside the spot markets. So not only was it when Aave came out, or ETHLend, that you could really only buy and sell the token, you can now trade and leverage short when these tokens come out. That is to say that the markets and the people purveying the markets, the exchanges themselves, they know that the money is in the destruction of token value. That is where our flaw is these days. And we see it again and again. Nillion just launched, again, down and to the right. I mean, you're seeing a 56% drop since they launched only in March. I mean, this is like just recently. 60% dips in 1 month. Well, way less than a month. In 2 weeks, we're seeing it with Omni Network, another massive one, down from a listing price of around, $27 down to $2. I mean, how is anyone going to come in and want to buy this? And if nobody wants to buy it, why would anyone want to build it? I mean, don't get me wrong. The tech doesn't really care about the price of these tokens. And that's at least a boon for the digitization of everything finance. But if we want to make money off of it, if we want these tokens to succeed and to enforce the buyers, the community that owns these things, I mean, we are just fleecing them left and right. And this is where our economy is just broken. It's the markets. It's something that could be fixed. All it takes are founders to say, hey, we're not going to raise at these egregious valuations. Of course, this would be saying no to millions of dollars up front. But we got to remember those dollars that are coming in, they're debt, because eventually you have to take this token to market and you have to reinforce that this token has value, that people should not be selling their tokens. They should be buying them. And when you sell them up front, you are front loading that value. And of course, these early investors, they're buying at a much cheaper price. So they are looking to sell these tokens. They want to exit. They want to recoup their positions and they want to make money. This is a fundamental problem that they are taking on millions of dollars in debt in the private round, which is realized when they go live and those token holders exit. And of course, the more a token goes down, the more pressure there is for a token holder to exit. At some point, you can't go to these LPs that you've raised money from and just say, yeah, I rode that value to zero because I believe in the technology. That's just not a fundamental way to run a business. So we can see that we have pivoted these markets from these beautiful things that allowed people to ICO and raise their own money. And frankly speaking, the ICOs, they happened on their own websites. You didn't need to gatekeep on an exchange. You didn't need all these crazy fees and costs. And I mean, you could just basically run one of these campaigns if you knew how to code in it. And now we're just in down and right. And I mean, even more difficult, you have things like Aave that are out there that are proving that they generate money. They're starting to use their foundation to buy back these tokens. I mean, that's basically the best thing you can get next to equity in the labs. And there's real value here. So why would you not buy Aave? Why would you go and buy these other tokens, right? It's just a very hard bet, especially when you know that things like Aave, things like these early companies have their tokens circulating. They've had their sellers exit the market. They've gone through real price discovery. And now, most importantly, they're getting product market fit. So this is something that can be fixed through humility. We need developers to be building products that they think are great. They need to be launching them earlier at cheaper valuations, saying, hey, they may not work. There might be bugs. There might be problems along the way. And that's risk you're all taking on as a token holder. But that does mean that when we finally strike gold, you're in for the ride. And that is the only way I can see these tokens coming back to be worth something. Otherwise, just go buy Bitcoin. Go buy blue chip DeFi products. Guys, it's a crazy time out there. I mean, my asshole has been, turning coal into diamonds. I don't think anyone knows what the hell's going on. So just fingers crossed. And as always, family, good luck, and I'll see you tomorrow.